How's it going, guys? Everybody in watching? Gonna let a few people get started. Let me know if you can hear me. Let me know if you can see the screen, see what's going on. It might be a little bit delayed, so if there's a little bit of pause, then don't stress, the internet is terrible here. Can you all hear me? Can you all hear me? Perfect. So let's get started with today's trades. At the minute, we are currently in GBP JPY. As we can see at the minute, we've had a little bit of rejection off of this trend line here. There's a little bit of 4-hour support below. Has formed almost a head and shoulders, but where we've broken out of here, I'm not too concerned about that. Also, the AUD USD, well, speaks for itself. It's rocketing. We're at just under 0.5%, I believe, but GJ should be sitting at around 0.5% as well. So not too bad. These trades were taken on the 4-hour chart, so they're going to take a little while to get going. But moving on, what do people want to see? What do they want to see? What do they want me to show them? Happy to go through anything at all. Everyone's stuck at home. You know, we're all stuck at home with our hand sanitizer. Staying clean, staying healthy. So what do you want to see? Hit me up in the comments. The comment section here on YouTube. I've got the chat up in front of me here on the laptop. And obviously I'm doing the dealings on the main MacBook here. So what do you want to see? Hit me up with some messages, guys. Entry requirements. Cool. Let's take a look. Someone give me a random pair. Random pair. We go through possible trade. USD NZD. Cool. Oh, don't actually trade that very often. USD NZD. Let's have a look. Fibonacci as well. Cool. So what I'll do is I'll run through a bit of fib and I'll run through some entry requirements. I'm going to show you, first of all, what I do on a daily basis when I'm breaking down the chart. Now, I haven't got any support and resistance here. So what I'll do is I'll go through step by step on a blank chart exactly what I'm looking at and exactly what I'm trying to do. So the first thing I'll do is I'm going to go to a monthly time frame. And then going to find some price areas of sensitivity. So we got one here, touched again, boxed inside. If you go back here, I expect you can see some more touches there. Then I'm going to look to see where roughly 1,000 pips is. The price range is usually around 1,000 pips for the monthly time frame. So that looks pretty good there to me, 1,200 pips. Okay? I'm going to mark that down there. We've now got a monthly zone. Can everyone see that? Then all I'm going to do is take this box. I'm going to pull it down and mark up another zone. This is how I find my monthly areas of price, because what I want to do is I want to trade between these areas of price. Have to bear with me on comments if anything's coming through because it's over there, so I can't see. Yeah, so yeah, like Jamie said, make sure you guys are on the monthly, not the minute. I was just going to get real fucking messy. Horizontal line again. Cool. So that's my monthly zones. As you can see, nice example here. It's broken down. I need to remember not to put it with my fucking finger because none of you can see it. So these are some monthly zones. I'm going to take my rectangle tool, make sure it's in grey, and I'm just going to go through and box out these zones. Now if you push Command on your keyboard, if you've got a Mac, you can click on what you want and just pull it down and it'll give you a an exact mirror of what you're trying to copy rather than copy and paste it. Okay? So what I'm doing is pushing Command, clicking on the grey box and dragging, and it is pulling it down, creating another box. So that's a nice little tip for you all. So then what I'm going to do is I'm going to open this up, I'm going to expand it out. We're trading within these zones. I'm going to take my fib tool. This isn't how I use fib in general, this is just an easy way to plot your weekly time frame. You've got the 1 at the top, I'm going to put it down till the 0 is in the middle of my monthly zone. Can everyone see that? Cool. Then what I'm going to do is I'm going to add a vertical line on the 50. That'll give me a perfect 50% zone, bang on in the middle every single time of these two zones. I'm then going to take my rectangle tool, make it orange, and I'm simply going to do the same thing as I did before, and this is going to give me weekly zones. Do that again. The 1, bang on the 50, horizontal line. Command, pull that down. Okay. Now what we've got also here is we need to put another lot above current price purely because of where price is at the moment. So all I'm going to do is put that there. Move that up to there. Do the 50% again. Bang on the 50. Oh, fuck that up, didn't I? Never used TradingView before, guys. Don't know what I'm doing. So, now we can get the fib out of it. Now what we can see is we've got a monthly chart. Gives us all our key levels. Pull one of these down. Put that back in there. Then what I do is, just for this example, I'm going to delete out these lower levels so it doesn't get really confusing. So now I've got levels where price is currently. Okay, nice and simple, nice and simple. Now what we're going to do is go down to the weekly time frame. I don't ever look any higher than the weekly time frame for price. Okay. Now what I need to look at is I have a 200 EMA. This 200 EMA acts as support and resistance. It's dynamic. So the EMA gives us, in this occasion, the 200, gives us an average price of the last 200 weeks of price. Okay? If we were on the daily time frame, it would be the last 200 days. The stronger the EMA, obviously, the higher the number, the weaker the EMA, the lower the number. And a big push here in the rise of the dollar recently. But what we can see, for a start, so on the weekly time frame, we have an uptrend. Okay? Very simple to see that. A nice price pushing up, pull back down, created a higher low, another higher low, boom, push back up again, another higher low. So now I've got that, I'm going to go to my daily time frame. So this is the same chart, just on a daily time frame now, a little bit more zoomed in. What I'm looking for here is another push, another kind of trend line. So I can see I've got one here, okay? So that would have been a trend line we were following until it broke here. But this come down, see how it's come down and touched monthly support and resistance perfectly. And we just plotted that from price zone. So what I am going to do now, I know this is pulled down here. I'm going to pull this one up here. So what we've got is, this one here is our weekly time frame uptrend. This is our weekly time frame uptrend. The reason I know price is in an uptrend is because from here, price has mainly stayed above the 200 EMA. Okay, it's pretty simple. And if you go back to a time when we had a big push again, this is a perfect example. The uptrend here is above the 200. So price is above the 200, it's rising. As soon as it breaks below, it's going on a downtrend, and then it's just messy, chopping between. But overall, we're in an uptrend. So now we're going to go to 4 hourly. I'm going to zoom in to this little part here. So what we can see here is a perfect example of how I'm going to show you how to use fib. So like I said, don't forget, this works as dynamic support and resistance. The price is following this support, this 200 EMA. Does that make sense to everybody? Everyone can see that's how it's working, yeah? Now what we have got here is myself and Jamie will look at USD earlier as well, and there's potentials for double tops in a lot of USD pairs, but it may not happen. So I've now got a 4-hour uptrend. Okay? Running like this. So if we zoom back out again, the daily uptrend, the weekly uptrend, the daily, the 4-hourly. Okay? So what we can see here on this 4-hourly time frame is price had a big push to the upside. So what we're looking to do is catch exhaustion. Now I'm going to mix fib into this for you. So what you do with your fib is you grab the lowest point. So as you can see here, this big wick down here was the start of a big push up. So I'm going to take my fib, I'm going to hit that point there. I'm going to pull it, so the 0 is at the highest point, which is this wick here. This gives us an indication of exhaustion. Where could price come down to if we exhausted? Now, the 382 fib is usually a good level of pullback for if it's going to continue the same direction, okay? So what you can see here is price is pushed all the way up to here. It's broke through the weekly zone here and pulled back again. But not only have we pulled back to this area here, this area here in yellow, we've pulled back to this, but it's a key area for 2 reasons, well, 3 reasons. It's the pullback after a break, so we had a little bit of a fake out, a pullback. We've had a test here of the 382 fib. So almost perfectly, you see how that almost perfectly lines up with the 382 fib here? This pullback, and then it's pushed back again. But this fib lines up with our monthly zone. So the key thing here is, it's not just lining up of nothing, it's not just a random number, this has met a key zone. The same again, a lot of you will know that I like to personally aim for the 318 area. This is a good area for me for pullback. This is what I like. So I'd like to see this strong push here, a pull back to the 618, which in turn would have met our weekly and our uptrend, and then a push back up. So then you'd probably start seeing something like this. Okay? That's likely, what I would have liked to have seen happen. It's the reason we didn't take this trade is because it didn't. But, so you can see how fib is used. Has anyone got any more questions on fib before I move on and why it's good? I mean, I'll go back and show a few more examples of fib and why it's a good tool to use. Let's find another big push. Right, it's another example here of fib. Haven't tested this, got no idea what it's going to be. The lowest point here to this highest point, the 0, and look, once again, pulled back to the 382 fib. Easy to see. Can everyone see how this matches up? We'll do another one. Big push here from here, down to here, exhausted. This time, it's pulled back to the 382. So if you'd have had a pullback target at that, you'd have hit your take profit straight away. But it did pull back to the 50% before it went again. Okay? So once it does this, if it pulls down here, reaches the 1, you're expected a pullback. If you get a pullback to like the 50%, you can usually get another push down to the minus 0.027 level, which is this orange level here. Can everyone see that? This orange level. So I would have had a target here from up here. You wouldn't have quite met it, but you probably would have cashed out there anyway. So that's why fib is very useful. It's to test exhaustion. You can see how much push the momentum's still got within the market. Another one here. So we've pushed away from the weekly zone down to this level here. Okay, we've had a double bottom here. So that would have shown us, if we zoom right in on here, double bottom, straight away. You can see that. Everyone can see that, yeah? Just gonna get our triangle tool, push one, push two, double bottom. Here's our neckline. Broke our neckline, came down, retested, okay? Didn't go long. We would have maybe gone from here to another level, but essentially this carried on down. And what it's done is it's formed a new push down here. But what fib gave you was the ability to manage this push from here to here. You saw a double bottom. You saw there was possibly going to be a push to the upside. Where would your target be? Your target would be the 618 of the fib. So you'd have had something like this. Once the double bottom had formed, you could maybe got in here. You'd targeted the 618 fib. Could have gone for a 1 to 2. Boom. Okay, everyone see that? Everyone see why that fib is useful? The kind of level it gives you for exhaustion. So let's go back to our original trade that we were looking at. Get rid of all this crap. We're looking at this live trade over here. So this is why we're using the Fibonacci tool to try and find a target. We've got a 4-hour uptrend forming. So let's say after this, we thought that we were going to get a pullback to the 618. What does it mean for the 618? So why is it a good target? In this case, I wouldn't have aimed for the 618. I wouldn't have. I would have aimed from here. I would have aimed for the 382 because that's where the monthly zone was. That's where the key kind of level is. Now, there's multiple things that I'm looking for on for a trade to enter. First of all, got something here, got a high test. So that's a long wick coming down from here, which shows that price has been forced away from this area and it's formed a sell candle. So that's a good indication to me that we're not going to reach this. It broke through, pulled right back again, okay? So this candle broke through. You're waiting for a retest. It didn't retest to go long. It broke back within this area again. So now we're trading between this weekly and this monthly zone, okay? So the target for me, when we broke back in here, if we can just go to replay here. So everyone would have been looking at this. They're like, okay, wow. We've broke through the monthly zone. We're in an uptrend. If it had broken back below, you probably would have been looking for a pullback to where the weekly meets the trend line. Can everyone see that? Everyone see why I'd target this? Price is gonna, if it price broke back through below here, don't forget we're always waiting for a retest. We're never just, price has broken through, we're going for a buy. We need to push and pull back again. So what I'd have wanted to see was something like this. Oh, fuck me. To pull back and then reject this monthly zone to go long. That's what you want, okay? If it's going to continue up, it's going to reject this monthly zone. If it continues up and we don't get a retest, there's no trade. But if price breaks that back down below, then retest this monthly zone, there's a good chance that if we don't break back through this monthly zone, that we will come down and find this trend line. This is a 4-hour trend line, and we know that price is going to try and pull back to a trend. We've got the daily down here, and then the weekly trend line down here. The chance that we're going to get a pullback to that is very low at this stage. So I'd be targeting the nearest trend line. Okay, so let's see candle by candle how this would have played out. Remember, we can't get in for a long because we're waiting for the next candle. So this is that candle. Didn't get that retest we wanted, did we? So there's no trade here to go short because we didn't to go long, sorry, because we didn't retest and then go. Although it did go up, there was nothing to tell us here that we were going to get a retest. In answer to Kamal's question, I'd be looking for a retest on the 1 hour, and then I'd be looking for the entry on the 1 hour to 15 minute. Okay, that's with my original strategy, the strategy that I've been using for years and years and years. With the new strategy that me and Jamie have been using, it'll be 1 hour or 4 hour. 15 minute will still give you a good indication, Kamal, on how to kind of what direction it's going to go, but I wouldn't get in solely on the 15 minutes, not strong enough. Okay? Fuck me, fuck that up, didn't I? Zooming in all over the place, guys, what's going on? So let's have a look what else is going to happen here. Next candle. So that's the pullback. So we've pulled back now from here to retest. So the next idea would be, okay, we're going to go long, aren't we? We're going to look for a long. Purely because price has pulled back, tested this area. If we then get a good rejection here, we'd go for a long. So this is what we're looking for. I don't expect it's going to go long because we already know what's happened. So it broke back below. So now the idea is, okay, we're back below. We're going to test this zone and then pull down to here. Maybe. Didn't get a retest. Okay? There's no retest. But what we did get is a break and a pullback on here. So if we went down to the 1 hour time frame now, you can see here, we got a push down to here, broke through, pulled back in. It's too messy for me. It's all too messy. Lionel Messi. So, entry requirements on a trade like this, not really. This is a bit better. If I was looking now, I'd say, okay, well we've had the 1 hour time frame. Let's have a look at this come out as a perfect example, okay? We've got some sort of level of price sensitivity here, haven't we? Price has come down. If we pull this through as well, touch, break, indecision, wicked here, come down, tested it, couldn't break, came up, pulled back, tested it again. So to me, this shows me that there's almost maybe a 4 hour level running through here. So what you want to do is, you can see now, we've got a possible downtrend on the 1 hour. I'd be looking potentially for shorts down to this trend line. But there's no trade, is there? We've got no entry requirements. This trade is just, to be honest with you, this is not a very good example because it's very choppy. What I'll do is I'll go to a AUD NZD time frame. Okay, let's have a look at this. Dun, dun, dun. So entry requirements. Let's try and find a good example backdated here on the 4 hourly. Chart's completely frozen. What's going on? There we are. Okay, got a bit of an example here. Let's get rid of these from back testing. What we've got here is a bit of a loose head and shoulders, but I'll show you why I'm looking at this example now, right? We've got a level of price that we can see running through here. Indecision 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 touches on this little zone, okay? So we could go ahead and box this off. And what you can see here is, although it's a bit messy, we broke below, we've also got another level here. So, can everybody see that? Everyone see why I'm looking at that? Multiple touches here again, levels of indecision in the market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 levels here. Now, what you've got to remember is also, this is just off the top of my head and shoulders patterns are not always perfect. But what we can see here is left shoulder, ahead, and a right shoulder. Okay? Everybody see that head and shoulders? Nice and clear? If you can't, say now. I know it's not a perfect example, but what I'm trying to do is give you an example of what I'll be looking at. We can see that price upon the right shoulder, the left shoulder pushed above, the head pushed right above the 200 EMA, and then the right shoulder peeked through, but the bodies of the candle stayed underneath. Now we've had a break of this neckline here. The neckline's broken, it's pushed up, and we've had a retest and engulfing candle on the 1 hour come out. Can you see that? So Kamal asking about the 1 hour time frame. This is what I'd be looking for. So I know a lot of you understand engulfing candles. That's what we've got here. Yeah, we've got a retest of the neckline. It broke below, but what I've also got here, if I open my EMAs, upon the cross of this, I've got a cross of my EMAs. Once I've had engulfing candle, and now I'm waiting for a cross. I'll keep going until they cross. And what these indications on the EMAs are, this is an 8 and an 18 EMA for anyone looking. I'm looking for a cross of these EMAs, and what that does is gives me an indication that there's a change of direction. So not only are we below the 200 EMA, which shows me that we're going to be looking at a downtrend now, price to start pushing down, we're also going to get a change of direction on the EMA, so they've crossed. So the first thing you can see here, if I just make this box completely transparent, we had a cross of the EMAs here. They crossed. Once they crossed, we had a big push down. Price pushed down. Fucking trading view. Price pushed down to there, all right? From where they crossed. So that's a nice trade there anyway. But we wouldn't have taken that because, for me, there's not enough. Oh, fuck. There's not enough indication. So I'm still waiting for the head and shoulders. Sorry, trading view's just gone proper mad on me. Hang on. There we are. So I'm still looking for the indication on this head and shoulders as to why it's going to be a sell. We know that head and shoulders is a sell pattern. We know we've broken the neckline. We know we are below the 200 EMA. But have we got a good enough retest? Not in my opinion. We broke through. We broke through in this retest, and then we had an engulfing candle. So we've had another retest here. Okay? So what I'm looking at now is I'm waiting for the final confirmation on my 1 hour for my EMAs to cross. Right. They crossed. So for me personally, now they've crossed, we can be looking at entry. So what is safe entry requirements? These are the confluences I've got for entry on this trade. I've got a head and shoulders pattern, a break of the neckline. We are below the 200 EMA. Okay, if I went to the daily, we are also below the 200 EMA. Okay, we're also on a downtrend because we're below the 200 EMA. We can see price here, so we can expect that maybe price will come down to our monthly zone. And we didn't even know that. See, this is just checking it. All the things are lining up. So we can see that the top of our head touched our daily downtrend. We are below both the daily and the 4-hour EMA for the 200 EMA. We've had a retest, a break, not a good enough retest because we broke back above. We waited for a new retest. We waited for an engulfing candle. This engulfing candle here, and an EMA cross. So now, let's look where our target would be and how we can use fib to try and figure that out. So first things first, let's measure up this push. The push started here, from the head to here, and look, we had a pullback to the 786 level. Have we had sufficient pullback from this new push from the right shoulder? So that was the big push we just measured, and that was the pullback. Now, have we had sufficient pullback from the right shoulder to where we are now? Yes. We've pulled back to the 382 level, and we pulled back nearly to the 50 level where we then rejected off. So for me, I can say, like I said before, that I can predict that price may potentially, from here, go down to 0.27. Okay? That's a good enough example for me. What I would be doing now is putting the position on and seeing if I can figure out where to get my stop loss. So it's a 60 pip take profit. It needs to be a 1 to 2. Can I get that? No. So where's a new target for us to find? Well, we've got the monthly level here. That's the monthly level. Can we then tuck our head and shoulders, our stop loss above the neckline of the head and shoulders? Yes, we can. We can even tuck it above and get a bang on a 2 above the right shoulder. That's a 1 to 2. 81 pip stop, 160 pip take profit. So, can everyone see why I did that? I've got a head and shoulders pattern. I've got a break of the neckline on the head and shoulders, a retest, an engulfing candle. I'm below the 200 EMA on the hourly. I'm below the 200 EMA on the daily. All signs of a downward movement. My next target is the grey monthly zone. And also I can predict, so I can say that if we get to 0.27 here, this level, that I can look to get this trade stop loss to entry at my desired target. But also we might have a little bit more movement to the monthly time frame. So let's see how this plays out now. Cool. So we hit take profit there, just here, okay? And bear in mind, this is back when technical analysis was looking brilliantly before the corona crap started happening, the market started going wild. So this just goes to show you how important technical analysis is. You see the first target was hit and then it rejected. Can everyone see that? It found this target here, rejected it, and then dropped again to the monthly zone. So that is a textbook trade. Downtrend on the daily, downtrend on the 4-hourly and the hourly. The head touched the downtrend. The right shoulder was formed. We broke the neckline. We retested. We had engulfing candle. We had an EMA cross. We found our support resistance. We used that to set our take profit and our stop loss. We let this trade run, and we would have just banked 1% or 4% depending on what you risked, and that would have taken two days. We've been in that trade for 2 days, made 2 or 4%, so you can't really complain. Any other things that you guys want going through while I'm online? More than happy to go through any of your questions, so just hit me up. I am a little bit delayed on here, so hit me up and I'll jump on as soon as I see anything. But other than that, guys, if everyone's happy and can see how easy that was to kind of mark up, then, you know, just let me know. But I'm happy to take any more questions you've got. Hope everyone's safe though. Hope everyone that is at home is chilling out and having a nice time. Bollinger Bands. Okay. Let's go to a good example, a nice clean chart. USD CAD. Want one that's a bit clean. I haven't got anything on. Right, cool. Bollinger Bands. So basically, they're showing you the volatility in price between the bands. Essentially, Chris. God, they're all flying in questions now. So, I mean, when a Bollinger Band is going sideways like this, you can see that there's not very much movement. This is what me and Jamie obviously call like quiet market, like they're not being loud. When they're loud, they're all over the place. So this is not an ideal. If the Bollinger Bands are just moving sideways like this is showing me that it's not a very good time to trade, just because price is just kind of moving around. So once you get a breakout of like big pushes on the Bollinger Bands, the idea of Bollinger Bands is once you reach the top, they want it to come back down to the bottom again, and the vice versa. So a lot of people that use Bollinger Bands are simply trading like this. You've reached the bottom of the Bollinger Band, you want the trade to come back up to the top of the Bollinger Band. That's how people are trading, like a 1 to 2. So obviously in this case, they'd have been stopped straight out, which is why Bollinger Bands aren't good enough to just use purely on their own. But they're very good at showing you when price is almost a little bit overbought or oversold. I imagine that's the easiest way to explain it. So you can see if a candle forces itself outside of a Bollinger Band, then sometimes price returns. So you can see here, price broke outside of this Bollinger Band on this wick. The idea is that it broke outside and then it has to return. So you'd be targeting the top of the Bollinger Band. Now the problem is with just using Bollinger Bands is as price moves, the Bollinger Band moves. So obviously your target was here to start with. Your target would have eventually been here, which means your risk to reward ratio is out. So that's why you can't really get trades purely just off Bollinger Bands. But they're good for telling you about the kind of the movement and support and resistance, because just like the 200 EMA, the top of this is acting as resistance, the bottom is acting as support. So what you could do is you can see that price is sitting on this Bollinger Band here. The chances that we're going to get price break right out of this Bollinger Band low are very small, aren't they? How often has it happened that price has smashed and a candle has closed massively outside the Bollinger Band? It hasn't. So you know that price is pretty much going to range between these support and resistance zones at the moment, which is just a good key. You can use them to kind of explain, to work out where your support and resistance is going to be, and they're like just like EMAs as dynamic support and resistance. But yeah, like Jamie's saying now, there's got to be set strategy that you use to use Bollinger Bands with. We've implemented it at the moment into a strategy that we use and it's working well, but at the same time, you can't just use it purely on your own. Now, if I go to a 1 day time frame, people ask about EMAs. The EMAs I use for anybody that wants to take a look at them and get involved. Let's go back to, actually we'll just do it on a clean chart, completely clean chart. So I'm not going to confuse you with support and resistance. What I am going to do is plot you some trend lines. Fucking sun's coming through the window, blinding me. So, we can see here that we have an uptrend here on the 1 day, okay? 1 day uptrend. I use the 8 EMA. I use the 18 MA, or EMA, depending on what you want to use. And I use the 200 EMA, okay? So what you can see here is we had a downtrend. It's formed here. So this downtrend We were above the 200 EMA. So that means that at this point, we're not looking for sells, okay? Exponential moving average. So the 8 is showing me, the 18, the blue is showing me the last 18 days worth of price. The average price over the last 18 days. The red is the 18, is showing me the average price over the last 18 days. Now, if I went onto the hourly chart, it would be 8 hours, 18 hours. So it does change. But what I'm looking for here is, the first key sign for me is we're above the support and resistance of the 200 EMA. Remember, they work as dynamic support and resistance. So I'm not looking for short trades. If I'm looking for short trades, I'm a fucking idiot, because this is acting like a floor. This support and resistance here is acting as a floor. So price is coming down, it won't break this. Now it has broken it, it's come up, we've had a push and then a push back down again. So how do we know that price was potentially going to change direction? The EMA's crossed, okay? The EMA's crossed here, they came up again, they did not cross back over, which shows me that it wasn't a strong enough push back to push it back in this direction. This isn't good enough alone to enter. We need this confirmation that we are now below the 200 EMA. Now that we are below the 200 EMA, we can begin to look for sell trades. Does that make sense to everybody? We're not going to trade, if we're below the 200 EMA, I'm not looking to trade down towards it. I'm looking to trade away from it on the bounces away. I'm not going to sell towards it. I'm not going to buy towards it. I want to be using it as support and resistance. So now we got these two key factors here. We had an EMA cross here, which told me that price could potentially begin to move. But I needed to be below this candle here, okay? Below this support and resistance here. What happened here was, we then had a break, a retest. We've came up and retested this blue EMA, which is acting as support and resistance, like a downtrend. So now I know that if we engulf and reject away from this, we are likely to be able to get a trade somewhere in here. So you could have looked for a trade here on the engulfing candle. This is on the daily time frame. You can use these EMAs on any time frame you like. I would have looked to tuck it behind the 200 EMA just in case, and I would have gone for a 1 to 2. And we came down close to our TP. And that's not using any other analysis other than the moving averages, exponential moving averages. What they do is they give you an indication of when price is going to change direction. So once again, let's look for another example. So let's use fib in this example too. We've had a big push from here, the bottom to the top, 1 to 0. So now we can expect a pullback to the 382 fib, as we spoke about before. So what would we be looking at? How do we know that it is time to get in? But because we know that in this scenario, we have had a daily double top, two high tests that have formed. They've broken this neckline here. When they broke the neckline, they also broke the 8 and the 18 EMA. They crossed. They pulled back, they retested, and then they rejected again. So there's a possible short trade here. And this time you trade down to that key zone that I said that I like to trade to, the 618. 618, you put the stop loss just above the wicks. It's a swing trade again here that you're seeing, just because we're using the daily time frame. This does work for all time frames. And you can see here, your bank's nearly 800 pips. So that would be price range from our entry off of the end of this engulfing candle. You're taking 758 pips. It's not a bad push really, is it? So just remember, EMAs are not to be used just on their own. You see how much of a better confirmation I got there from the Fibonacci as well? So let's look again. How these things, how the Fibonacci and how the EMA, you can work together to give you an indication of, number one, you know that price is exhausted because you've had an EMA cross, and then where you're going to target to, okay? So let's do it again. We can do this all day. You got to focus on the big pushes. Right. Big push from here to here. Yeah, you can't write it any better than this, even if I was trying to write it for you and draw it on the chart. The first push here, for the big push up to the top here. Forget anything else, we can't see anything else. Let's get rid of all of this. All that we can see is that we are above the EMA. We're above the 200 daily EMA. We've got an uptrend forming. Cut those wicks out and it looks a little bit neater. So, we've got an uptrend. The first one we're going to measure is this one here, from the first push of the uptrend up to there. It pulled back to the 50% mark, which also was the trend line. So we've pulled back to the 50% mark here. This one now that we're interested in, take it from here, put it up to here. This is giving me an idea that there's exhaustion. We don't know that there's going to be exhaustion yet, purely because we haven't got a cross of the EMA. Keep going, keep going. Right, EMAs have crossed. Where are they likely, now price has crossed, where are we likely to pull back to? We're likely to pull back to the 382 fib. Yeah, because that's the level. That's the level that's a key level. 382 or 618. In this case, if we pull back to the 628, you can see the likelihood is we're not gonna meet this trend line, are we? We'd have to break right through this trend line potentially to get to it. So a good target here, if you want to look, you can do 382 or 500. Now let's not be greedy. Let's go for the 382 and see what happens. So we're going to tuck the 382 here. We're going to tuck it behind the EMA cross. Boom. Just got a 1.2 there, a 1 to 2 there. Hit stop loss. See? So you can't use it every single time. That's why if we'd have been a little bit more cautious and use a bigger take profit and a bigger stop loss, you might have been alright. But in this case, you weren't. So it doesn't work every single time. Trading is real, but what you can see is we pulled back to the magical, eventually, 382 level. To the pip. See how perfect that is? Okay? So, once you've got exhaustion, if you'd have come down, so let's look at this on let's zoom in, because we're not going to be using them on a daily time frame. I just want to give you a good example of how we could have got this trade, okay? Let's go back to this candle here, to the fib. Pull this fib down. If we'd have gone to the 4 hourly and waited for an EMA cross on the 4 hour, right, now we've got an earlier EMA cross. So what I tend to do is, a lot of you may have seen it, I'm looking at the higher time frames and my entries in the 1 hour. So I've gone from a daily to a 4 hour now. Let's just look at entry on a 4 hour. We can still see this big push here, and our target wants to be the 382. So now we've got an earlier entry of this EMA cross. If we were to enter off this EMA cross, pull down to here to the 382, we can also see that that level lines up, the 382 level lines up with the 4 hour 200 EMA roughly. So you can put it to here. We're going to pull it down for a 1 to 2. we don't want to be greedy. Simply going to play this out now. And this, guys, is why you find entry on a lower time frame. So we didn't hit take profit, but we got pretty close, didn't we? You see how close it came down to the 382 level? So it's all just a matter of using the multiple tools, the EMA, the fib, everything. So for entry, I'm looking for the trends to be lining up. So I need either an uptrend or a downtrend on daily, 4 hourly, 1 hourly. They've all got to be the same. Then I'm looking for the EMAs to cross. I'm looking for market structure. Can I get a sufficient target? And then I want a rejection of that zone. So engulfing candle, 3 engulfing candles, which are called soldiers. So if you get three sell candles in a row, they're called 3 little soldiers. Lots of people call them different things, but that's what I call them, and many people do. So just get your confidences stacked up and get that working together. We're going to go live again tomorrow, same time, 2 o'clock. If anyone's got any more questions, feel free to just ping them over in the chat and I can help you guys out. But as far as this goes, I'll try to keep it pretty simple. Try to show you how simple it can be when you're looking for stuff. Hopefully you understand the Bollinger Bands a little bit better. How EMAs act as support resistance, but they're just essentially trend lines and support resistance, but they are wavy. Getting a bit wavy out here. But other than that, guys, I think we can leave it there, and we can agree that you guys have got a lot of time in your hands now to get stuck in. So go ahead, take this time away, look at what you can learn, practice using the fib tool. Even if you're just going back on trades like this and just measuring the pushes and the pullbacks, try and do it on 4 hourly and daily and stuff like that. See where your targets will be, and just go from there. But for me now, guys, that is over and out. Peace.